Hi everyone, welcome back to Be Rich. What am I going to talk about today? Today I want to talk about the Japanese ETF. This has been another question which has been asked repeatedly to me and to everyone related to my organization. What about Japanese ETF? Vinod, should we be investing in Japanese ETF? And by the end of this video, I'll tell you if you should do or not. But if I don't tell you what it is all put together and give you a bit of a background on it, you won't understand why I'm saying what I'm saying at the end. So let me give you a bit of background. In 1995, the Reliance Group partnered with this Japanese company called Nippon Life, and they created a company which is known Reliance Nippon Life Asset Management. So basically this company was set up in 1995. Through the 1990s, 2000, the companies expanded, offering products and distribution networks, becoming a leading mutual fund house in India. So what they did focus on Indian clients investing in domestic market, and they focused on foreigners who wanted to invest in India to allow them access into India. So they're managing funds for everyone who wanted to, all investors of all kinds of class. They're helping them manage their funds here and invest in India. In 2007, Reliance Nippon Life Asset Management, as it's called, went public by listing the shares in Bombay Stock Exchange and in the NSE. And before that, in 2012 itself, Nippon Life Insurance Company in Japan, initially which acquired a stake in the company, over the years was slowly acquiring more and more of the company. They became a major partner in this. They rebranded it into the Nippon Life India Asset Management Company. They dropped Reliance from 2019. So now it's known as Nippon Life India Asset Management Limited. Okay, so this is basically what they've been doing. And in 2019, when our Prime Minister was visiting Japan in 2019, India and Japan, they launched the Indo-Japanese Emerging Technology Innovation AIF, which was a $187 million fund of funds. Okay, fund of fund means all kinds of fund managers all collaborate together and they decide to invest. And it was to invest in Indian tech startups. The fund was aimed to raise 150 million from Japanese investors and the rest from Indian investors, with its first close expected in September. It's managed by Reliance Nippon Life Asset Management Limited. The funds plan to be invested over 200 Indian companies specializing in areas like IoT, AI, MLF, fintech, healthcare, and B2B and all this. When all that was happening, they also launched the Nippon Japanese ETF, right? So when the 2019 this was launched, the fund's objective and strategy primary objective was to provide long-term capital appreciation by primarily investing in the equity and equity-related securities of companies listed on recognized stock exchanges in Japan. Second objective, generate consistent returns by investing in debt and money markets securities in India. Right? The fund's inception date was 2024. Current asset under management is 292 crores as of December 31st, 2003. This is a key point. Expense ratio is 2.47%. Right? So the performance, first year performance, okay, has been 16.99%. 3-year performance has been 1.2. Okay? Remember, we're long-term investors here. 5-year return is 6.57. And since inception, the average is 7.06. Okay? The fund has been able to double its money every 8 years since the launch. These are the key things. And it's considered as a very high risk. Comparing mutual funds, when they compare mutual funds, this is considered as a very high risk level because of the nature of the investments they're making. This gives you the most broad spectrum I've told you about, where this company is from, what are they doing, and the key thing is the expense ratio. So what is an expense ratio? What does it mean when I tell you the expense ratio is 2.47%? That means for every 100 rupees, 2.47 rupees is taken as fees. This is not only the profit. This is taken straight off. For every 100 rupees you put towards investment, that much is taken out of your money as immediate fees. This is aside from the profit. If they make you a profit, what they will take on that percentage. Now, if you compare this, if you take any good mutual fund website, I'm looking at Value Researcher, and if you compare it, and if you see this over a 5-year spread or a 3-year spread, what I'm looking at here, and you see the returns and you see the graph, how the Nippon Japanese, Indian Japanese equity has performed against the index, which is the BSE 500 and other international equities. If you see the returns, it's below even the index. Right? So this is the main reason why we keep telling you not to put in something like a fund of funds. Yes, it does sound attractive that you're investing into a Japanese market and you're looking at it. Then your question immediately will come to your mind is, so sir, then who's this for? If it's not meant for the common man like me and you, why have such a fund which is not giving any great returns? Well, it's meant for people who have high net worth individuals who are not you and me, who have a lot of money to play with. And when they're hedging their bets, this is one of the ways they'll hedge their bets, by placing some money into this. So, yes, is it there? It is there. Should you invest? I wouldn't ask you to consider this as an investment, because if you just put it in the index, which as this graph shows you, you'll get much better returns. And even the UTI Nifty 50, which is there, I think that has an expense ratio of less than 1%. So if you see, the UTI index fund has for a regular plan, has an expense ratio of 0.41%. Okay, that's the Japanese is 2% more, and the direct growth plan has 0.2%, which is even lower than the regular plan. So if you compare it, these two funds, the Nifty growth fund and the regular plan, gives you 2% more straight off the bat. So you can imagine the Japanese fund has to outperform this and give you 2% more, because they're taking 2% or more for their own expense ratio. So if you look at it, it doesn't make mathematical sense. And another thing Anand has told you also is the Japanese market is almost going to break the roof, which has been under for almost 40 years. So the growth which you're seeing, even if you see in this Nippon, it's only been for the last 1 year, where it's given 17%. The previous years you look at and you see the average from 2014, it's only at 7%. So if you look at it like that, this is not a fund I would say you should consider. I've put in an article on my Medium page about this in far more detail with all my links. So you can read it if you want more detail about why I think you can give this one a miss. If I'm wrong, please let me know why I'm wrong. I would love to hear you why you think I'm wrong when it comes to this. I hope you enjoyed the video. I hope you've understood why I think you should give Nippon ETF a miss. If you are looking at Japanese markets and you're better off to invest in Indian markets and consolidate and grow your portfolio to a considerable size, then you can always enter the Japanese market directly by yourself without any fund, mutual fund or fund of fund requirement. This argument will definitely change if we find something which is directly like an index fund, which we have Nifty, and we get a Japanese index fund in India. At that point in time, we have something to discuss. But this is why I would not put money into this. I hope it helps. Thank you, and I'll see you in the next one soon.
Good evening. My team has decided to do another event. The last event was at Trivandrum, was a very successful one. So we decided to ask people where we wanted to do an event, and my team chose to do an event in Dubai. We are planning to do an event in Dubai on the 24th of February. The event is roughly scheduled between 3:30 to 5:30. It's a Saturday, you will have plenty of time. Those desirous of attending the event or meeting me may contact my team at the WhatsApp number given below or drop an email at the email ID given. My team will contact you and help you. I hope to meet you all in Dubai. It's not only Dubai, anywhere from the Emirates. I hope to see you there. Thank you. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.